Hey everyone, last week new inflation data was released and the headline number crept up by 20 basis points to 3.2%. And while a rise in the headline inflation number is obviously not what we were hoping for, it is something we did expect because the price of gasoline and food have both gone up recently. But if you strip out food and gas and look at core inflation, which is a more meaningful number and something the Fed is paying closer attention to, inflation actually went down by 10 basis points to 4.7%. That's good news. I'll go even further. There are two main pressure points that are keeping inflation elevated. The first is services. Services inflation remains elevated, but it has been going down every month since February this year when it peaked at 7.3%. Last month, services inflation went down another 10 basis points to 6.1%. And as I've mentioned in previous videos, we're likely to see services consumption ease in the coming months as excess savings are burned off. And that should further reduce the services inflation pressure. The other main inflation pressure point is housing. Now, it's commonly known that housing inflation is a trailing indicator, but it has also been coming down steadily since peaking at 8.1% in January this year. Last month, housing inflation declined by another 10 basis points to 6.2%, and we expect that trend to continue as both home prices and apartment rent growth have flattened considerably. If, in addition to gas and food, you exclude housing inflation from the headline CPI number, then the core minus housing inflation rate is actually just 2.5%. So my point here is that overall, inflation is going the right direction. And as housing inflation recedes, core inflation should move back toward 2%. We're just waiting for the numbers to catch up. The Fed is likely aware that aside from the volatile food and gas prices, as well as the lagging housing inflation, the trends suggest we have good momentum toward their 2% inflation goal. Wall Street has already recalibrated the likelihood of the Fed keeping rates flat in upcoming meetings, with a 90% likelihood that the Fed will not change rates at their September meeting, a 75% probability of no change in November, and a 68% chance that the Fed will hold rates steady in December. The prospect of falling inflation and interest rate stability has given a boost to all of the confidence indices. Consumer confidence has been on the rise for the last couple months and is now at its highest level since July of 2021. Consumer sentiment, which can strongly align with apartment demand, is also trending up. CEO confidence, which can influence economic growth, is also on the rise, and small business optimism has also made gains. Something interesting that I noted about small business optimism recently is that commercial real estate transaction activity seems to move in tandem. If you look at the year-over-year change in small business optimism and compare it to the year-over-year change in commercial real estate transactions, there is a pretty strong correlation. That's not to say necessarily that small business optimism drives commercial real estate transactions, but in my opinion, the more likely case is that the forces influencing small business optimism also influence commercial real estate investor decisions. Nonetheless, the recent upswing in small business optimism suggests that a recovery of commercial real estate transactions could be in the cards for later this year. What I'm trying to share is that numerous indicators are looking increasingly positive. That includes inflation, interest rates, confidence levels, and recession risk. And that in turn suggests positive momentum for commercial real estate investment. Of course, there are always risks. For example, if we have a severe hurricane season, or the banking sector takes another hit, or there's another major geopolitical incident, then soft metrics like confidence level could be negatively impacted. But at this point, the outlook is strengthening. Think about that for a minute. Right now, inflation is generally trending lower. Wall Street is laying a pretty good bet that the Fed will hold rates flat through the end of the year. Virtually every confidence indicator is on the rise, and the threat of an imminent recession is falling. As a real estate investor, these are the signals we watch for as we keep our eyes on the horizon.